Alright guys, in this video I'm going to teach you a Forex trading strategy based on ICT concepts. On my channel, previously I've uploaded a 9:30 a.m. trading strategy, and that works for indices only, okay? I recommend that you do not use that strategy with Forex, but this strategy specifically is for Forex only. So if you're interested in trading Forex, this video is for you. So I don't want to waste your time, and let's get straight into the video. So the very first thing is that you want to change your time zone to the New York time zone, just so you don't get confused when I'm going to tell you all these timings, right? Like the midnight open, the daily high and daily low, and 8:30 open. So make sure you change it to New York. Once you have done that, you want to mark out the New York midnight open. So what is a New York midnight open? It's basically 12 a.m. New York time, right? So the opening price of that candle at 12 a.m. should be your New York midnight open. Why do we mark out the midnight open? So when price is above the midnight open, you can look for short. You can look for short setups, okay? And when price is below the midnight open, you can look for long setups. When price is below the midnight open, the price is considered to be in a discounted zone. And when the price is above the midnight open, it's considered to be in a premium zone. So you can look for short positions. Now, before 8:30 open, right? I repeat, before 8:30 open, you want to mark out the daily high, right? You want to mark out the daily high and the daily low before 8:30 open. Make sure you remember that. So once you have marked out the daily high and daily low after the midnight open, so you should start looking for daily high and daily low after midnight open and before 8:30, right? So let's say the clock hits 8:29. You can still look for the daily high and daily low, but once the clock hits 8:30, right, then you cannot look for daily high. Your daily high should be set before 8:30 or preferably 8:29, okay? And right when the clock hits 8:30, you can look for price to sweep either the daily high or the daily low. So let's assume that price sweeps the daily high. So one more thing, when you mark out the daily high and daily low, you can mark the daily high and daily low on the 15-minute time frame. It doesn't really matter as long as you're marking the correct daily high and daily low. Once you're marked out the daily high and daily low, the correct one, what you want to do is you want to drop down to the 1-minute time frame, and then you are going to simply look for a liquidity sweep. So let's assume that price sweeps up the daily high after 8:30 open, after 8:30 a.m. New York time. So price sweeps up the liquidity, and what you want to do is you want to wait for market structure shift or change of character, whatever you want to call it, with displacement. And I mean displacement, okay? So price should come down with heavy volume, okay? And it should change the character or shift the market structure, if that makes sense. When it does that, you want to take your entry from the extreme fair value gap and kaboom. It's really that simple, guys. So what is displacement? So ICT gave an example about it, like in his one of his ICT 2022 mentorship videos, and he said that let's assume there's a pool, right? And there are a single human jumps into that pool. The water splash is not going to be big, but let's assume that an elephant jumps into that same pool. The water splash is going to be really big. So similarly, you should be looking for those moves that break the structure, right, with volume. So I'm going to repeat the rules again. You want to mark out the midnight open, all right? You want to mark out the daily low and daily high before 8:30 open, and you want to start looking for daily high and daily low after the New York midnight open. After 8:30 or at 8:30, okay, you want to see price, you want to wait for price to sweep either daily high or daily low. And you have a window period till 12 p.m. New York time. All right. Once the clock hits this time, 12 p.m., you should not be trading. If you are in a trade, you should close that trade, all right, before 12 p.m. And you should not be looking for any entry after 12 p.m. So make sure you write this down somewhere so you remember that. So is that quite simple, guys? You want to wait for daily high or daily low to be swept, and the timing is a little different from indices. Now let's get straight into the examples, and that is going to clear everything. So see you guys in the example number 1. So here is example number 1 on EURUSD. This happened recently on 30th November. So you can see that I've marked the midnight open. So this is 12 a.m. and right after that we had the daily low, and at 18:15 we had the daily high here, and this candle is 8:30. So if you go to the 1 minute time frame, you can see that the 8:30 open is around here. So let me mark this out. Open is 03839. So this is 8:30 open, right? And we have the daily high here. So let's wait for price to take out the daily high or daily low. And if I play this through, you're gonna see that we have taken out the daily high, and we need to break the structure, right? So let's see if price breaks this structure. It does not. So now we have created a higher high, higher low, higher high, right? So now what we can do is we can wait for this structure to be broken with displacement. And as you can see, we have just broken the structure, but we broke the structure with displacement. So you see these consecutive candles, right? It shows volume, all right? It's not something like a messy price action. It's just a clear displacement with fair value gap. So now what we do is we enter from the extreme fair value gap right here, all right? You want to take your short position from here. You can put your stop at the body, at the top of the body of the candle, the first fair value gap candle, or you can put it right here at the high. And you can simply just target this level right here, which would be your closest hanging fruit, as IDC says. And as you can see, we got the entry here. And if I play this through, you can see that we go down and eventually take out this low here as well. And that is a perfect trade. So I'm going to give you guys another example. See you guys in the example number 2. Here is example number 2. As you can see, I've marked the midnight open, which is here, right? And then I have the daily high, and then I have the daily low marked at 8 a.m., right? And this is the 8:15 candle. So let's drop down to the 1 minute time frame. So we have this daily low here. Let's see what price does. And as you can see, price took out the daily low. So let's wait for market structure shift with displacement. And you can see that we have this big bullish candle. We have like 3 consecutive bullish candles, 1, 2, 3 with fair value gap. And we have broken this structure right here. So what we can do, we can simply look for an entry from this fair value gap, and we can go long here. We can put our stop loss right below this level or below the candle, but preferably you can put it, if the candle has this wick, you can put it at the middle, okay, of this wick, just to be on the safe side, if the wick is really big like this. And you can see this is like a momentum to the upside, right? So what we can do now is we can target this level right here, right? Or we can target this fair value gap here, the start of this fair value gap. So let's see how this plays out. We get our entry, and if I play this through, you can see that we go up and eventually just take out these levels as well. So this was a 6 risk reward trade if you targeted this level, but you should be fine with targeting this fair value gap as well. So you can see the precision in this, guys. It's just not something, you know, random made thing that I'm teaching you. It actually works, and this is what ICT teaches you. Now this is without daily bias, okay? So your win rate is gonna vary from like 55 to 58 or even 60%, okay, with EURUSD. But if you use daily bias, your win rate could be around 70 to 75%. All right, But if you use this model without daily bias, you are still going to be profitable. Okay, so I'm going to give you guys one last example, and yeah, and then I'll see you guys in the next video. Alright guys, so here is example number 3. As you can see, I've marked the midnight open, which is around here, and after midnight open, this is the highest point of the day, and before 8:30, this candle right here is the lowest point of the day. So if we go to the 1 minute time frame, you can see that the 8:30 open is with this candle, right? So 8:30 happens here, and before that we have the lowest point of the day, which is around here. So now what we do is we wait for price to take out the daily high or daily low, and in this example, price is going to take out the daily low, and as you can see, price took out the daily low, and what we have here now is a sweep of the daily low, and we have a market structure shift. My god, when we have a market structure shift with 1, 2, 3 candles, right, and it shows volume. You can see the size of these candles, right? It shows true volume, and we have fair value gap, so we can take our entry from the fair value gap. We can go long right here, put our stop right below this low. Our first target could be this, our second target could be this, or we can target this fair value gap. So let's see how this plays out. And as you can see, we get our entry before 12. So you can see that your entry should always be, you should not be trading after 12. All right. So right now, as you can see, we got our entry at 9:57. So we should be good. So let's see how this plays out. And wow, this was amazing. You can see the precision. We filled the fair value gap. Right after taking out the daily low, we had a market structure shift, and we took our entry from the extreme fair value gap. And look at that movement. If we targeted this level, you can see price could have taken this level as well. So I want to tell you guys some keynotes. So let's assume that price has a market structure shift and you take your entry, but you lose that trade. Once you lose the trade, you should come back the next day. You should not be chasing the price. So let's say price does another market structure shift. You're going to be like, wow, I lost one trade. Maybe this is the real market structure shift. And you take your entry and you lose again. So do not do that, okay? If you lose one trade, just call it a day and just come back the next day. You're only going to take one trade so make sure you only take one trade. And this strategy works the best with EURUSD. All right, it works the best with EURUSD, and it also works really good with GBPUSD. But for all these pairs, you're going to backtest it yourself, and you are going to find the best pair for yourself just by backtesting, and you're going to backtest by your own self. For me, EURUSD and GBPUSD work the best, and my favorite one is EURUSD. So I hope you enjoyed this video. If you did, make sure you hit that subscribe button and turn on bell notifications for amazing content like this. See you guys. Goodbye.